All right, we're going live, mate. We are officially live, I believe.
Yep, we're live and you're recording.
According to Zoom, we're now webinar streaming live, bro.
Well, it's actually interesting because I had a forecast in my diary for yesterday saying this will be the end of stage 1 of the restrictions, and that was sort of my prediction when this started to come out. I kind of thought, well, probably by now we'll probably be getting close to the end of the first round of restrictions that we're on. So That doesn't look like I was too far off.
Well, it's interesting. I was chatting with I don't know if I said this before, but chatting with some business colleagues the other day, and we were doing a SWOT analysis of the lockdown, and one of them said, I think the biggest risk is it won't last long enough because people have changed some of their business procedures, and it won't last long enough, and then everyone will want to go back to the olden ways, and there won't be enough time to create a new habit. So that was an interesting perspective, I thought, because, right now, doing a bit of a pivot at positive, it's taken us sort of 6 weeks to really get our mojo on to deliver really good digital content, get the tools, the techniques, and so on. And so now for participants, people who are, dialing in and becoming interested in what we're up to digitally, it's kind of like, maybe 90 days of this creates a good habit, and then we're all good to go.
What's that? The book? It's how many days does it take to create a habit?
Yeah, micro habits or something like that. Is it micro? It's Is it the Miracle Morning, 90 days or something like that? One of those ones?
I think it's all in and around there. And they sort of say that, 30 to 90 days to embed a habit. And so we're in that 30-day sort of period now. And it's funny, I actually, 2 conversations and one we're going to address later on, which was from Daniel, who was in the fitness industry, but which we spoke about earlier. But in having a chat with him and Tracy and a couple of others, it was really interesting. So the dynamic was, coming into COVID, do you pivot? And the word pivot's getting used a lot, but do you pivot to survive or do you pivot to thrive? And the difference between the two was really, if we're going to pivot to survive, you have to ask yourself the question, would we be better off and going, okay, like if you literally need to do it to survive, that's one thing. But if you're doing it just to maintain revenue, where otherwise, if you took the time to recreate where your perfect business would be in the future position of now, so in 1, 2, 3, or 4 years from now, if you took the time and went, okay, we're going to take a hit, let's not pivot to maintain cash flow, let's pivot to thrive in the future landscape.
100%.
You're almost having to make the decision, because it's not nice to take a hit to your cash flow, but is that a wise decision to do in order to restructure your business in the right way? Because my thinking is, if you focus on just pivoting to survive, then you may actually be creating a habit that you might do all of this work, and then when this switches off, it's gone.
Well, let me ask you this question. I've asked this so many times. I've said it to myself so many times. Business owners listening in, property investors listening in. I've said this to myself many times. It'd be bloody great if I could just stop for 6 months and not have any consequences and redesign it. I would, but I'm actually just caught in this this fucking rat wheel. Could I just get 6 months, which is a pause button with no consequences, and I would do it differently? We're right here, right now. Do you know what I mean?
And it's totally forced, right? And it's the decision whether we have the conviction to do that, the strength, the courage, the conviction, and the grit and tenacity. And I think it also comes down to a couple of conversations that I've had through the week as well. And there's been some really great team results for businesses and clients of mine as well who are not business owners, who are really contributing heavily to the businesses that they're associated with, but taking pay cuts and potentially even reducing their hours by choice, not by mandate, to make sure that the businesses are there. So there are some people who have got that we're in this together kind of approach. But then there's the people who have the mindset of, well, I'm going to get $1,500 a fortnight whether I'm with you or not, so I may as well sit on my Jatsi and watch Netflix. I don't know about you, mate, but that second one just, it really doesn't sit well with me.
No. Well, I mean, I saw a good old Facebook meme the other day. I'm one of those tragics who likes a good Facebook meme, but
who doesn't?
But it sort of said, what are you gonna do with the lockdown? You're gonna come out of it with some new skills, or you're gonna come out of it with, 5 series on Netflix that you watched? What's the outcome for you? Because I mean, really, at the end of the day, like, that's it. I see, I see it as an opportunity to learn some new things and create some new behaviors and all sorts of stuff. I'm cautiously excited about the future. I still think there's lots of hard work to come for a lot of people. Like, don't get me wrong. The rebuilding of the economy is going to be bloody hard work for a lot of really good people. It's going to take grit, tenacity, fucking blood, sweat and tears from everyone. But for me right now, what I'm sort of sitting here, thinking is that, what is the gift in this? It's always easy to sort of do it in retrospect, but where's the gift? What can I do? What is the value? What can I get out of it from a lesson learning skill point of view? I don't know who's put that in my head. Maybe it's bloody Kerwin. Maybe it's whoever. It just keeps going around in my head. Where's the gift here? What can I learn from it? Etc. So whether you're a property investor or business owner, the idea is, on the other side of this is something different and new. And will you be ahead of the pack? Will you be on the front foot? Will you be catching the wave and, riding the bloody, will you be hanging 10 or what? I don't know. I'm not a surfer.
We'll be talking about the documentary on Netflix about the Great Surfing Pipeline.
It
really is.
Did you spend your time watching the Tiger Kings or whatever it's called? Or did you spend your time,
Tempting. That looks bloody weird. It looks bloody weird, but it's one of those things. It really is one of those incredible periods of time which we don't get. And I understand that there's the austerity side of the equation, but there's friends and colleagues of mine who are like we spoke about in the last Wine and Wisdom, down and out as far as when this thing hit, they just lost everything because they had no choice. Their restaurants were stopped in their tracks. But they're spending the time to upskill, spending the time to learn new ways of being able to take the goodwill that they had before going into this and transform that going out the other side. Yeah. Probably with a healthy dose of Netflix as well. I mean, we can't avoid it.
Yeah, we can't knock Netflix. It's actually quite good. But the point is, learning some new skills. I mean, at the end of the day, mate, really, this is really interesting. From my point of view and from your point of view, we work in helping people with their finances and their money. You've done it for 20 plus years. I've done it for 20 plus years. We always talk about, the average person, whether they're in business or, in PAYG, are probably 4 to 6 weeks away from, a zero bank balance. And for me, this is probably for a lot of us, a super gift to realize that that's actually really true. The government's actually providing a really soft landing for everyone in that position right now. in my conversations with lots and lots of my clients, it's like, don't miss the gift in this experience, because if the government wasn't there, then this would be, oh wow,
Mate,
and the government and banks are doing a good job of it. Let's face it,
We, I chatted with a client of mine, and if you're watching, Pat, g'day, mates. I'm not quite sure what time it is over there in Colombia, but hopefully you're listening. And I just realised in those conversations, I haven't been speaking with some of my international clients, and our focus has been so heavy, and I'm about to get a bit bearish here for a moment, which is not the best on a Friday. And for those of you watching, we're going to get into talking about some serious content soon in the commercial leasing space and some investing space. But gosh, it was an incredible lesson to learn as well, because on what you're saying with the soft landing with our government. So he's in Colombia, and it was the first conversation that I had, because we're focused on Boris, who's got corona, Trump, who everyone wishes had corona, right, and ourselves, and that's where the media limelight is.
Yeah.
And so when I was chatting with Pat, I said, "So what's actually happening over there? I've never even thought to ask." So that's the first part. I haven't even been conscious enough to worry about what's going on in the rest of the world, other than the ones that are in the press. So basic commentary was, within 2 days of the lockdown, there was borderline riots happening, short places, because these people live literally day to day. When you and I talk about it, we try and stop people living from week to week, and we start to build buffers and investment zones to be able to withstand months and years.
Yeah.
But these guys were day to day and sometimes intraday. And so he was saying, literally, there are people on the streets and they're getting lime poured over them, and they're waiting for the trucks to come and pick them up, because of the proximity of the housing and the proximity. And Brazil, and he said that's in Colombia, Brazil is just like a nuclear epicenter waiting to happen.
Wow.
So we sit here in Australia, and we actually haven't been exposed to some of that.
Yeah.
But it's also a really good thing to understand, because, and we will talk about investments later on, but we have to start to think about the rest of the world and the effects of potentially closing our borders and becoming, our own self-sufficient beast for a period of time, because apparently the El Chapo, or whatever you call it, in the Presidente, is still hugging people and thinks that this thing is, it's a ghost. And the ramifications are quite serious. So what we've got over here, as much as it's terrible, it's like, geez, I tell you what, there's governments in the world who aren't taking this seriously, and the ramifications we will all feel around the rest of the world of their ability to be able to contribute back into society, which creates opportunities, but it also creates dangers as well.
Yeah, there's opportunities there. For me, I certainly, share that opinion too, Andy. Like, I believe the ramification hard work is yet to come. We've got probably 12 or 24 months of solid, smart work to do as business owners, property investors, individuals, like to really be on point with this next sort of 12, 24 months, interesting times ahead. Once we get back to work, what does that work look like? And where does the future lie? I've always been a sort of a cup half full type of person. I'm quite an adventurer. I like a good adventure. I used to say that often, and I got beat up in the GFC, and I've avoided a few adventures for about a decade. Really at the core, I quite like an adventure. But some people don't like adventures. Some people do. But really, at the end of the day, like you said, there's opportunity, and what might it look like? But mate, maybe it's a good time to sort of get into talking about a couple of the questions that we sort of had this week, potentially to talk about and answer. Maybe, hey, what's going on in the world of the stock market and shares and other things? Your wheelhouse, and
Yep.
maybe we talk about the property world, and maybe around the world of commercial leases and bits and pieces in my wheelhouse. Yeah, so, mate, what's going on in the world of banking, stocks, and finance?
And I'm actually just bringing up my notes because I spent yesterday, I must have had about 8 hours worth of meetings, some of them recorded, and I'll release them to groups later on, because some of them, where they're not bordering on advice, are really, really poignant. Some of them are quite, there are very much two different camps of investors that are out there at the moment.
Yeah.
But one thing that everyone is quite unified about is at the moment, there is going to be a de-link between Australia and the rest of the world. And this is something which I think can work really well for Australia and Australian investors. But also we need to be cautious of how it operates. And so we'll also, so I'm going to paint some pessimism, and I'm going to paint some opportunity, and then I'm going to paint some real fucking gold. And these are great things to look for. And one of the great comments that I had today from a very learned colleague of mine was, you've got to keep your eye on the 10-year treasuries, both domestically and internationally. 10-year treasury yields here and over in the US, because when we're into the stock market or we're into property, we're looking at, well, whether this property does well, whether this stock does well. But these guys who are judging the 10-year treasury bank bills or bond yields, they're actually having to look at the whole globe and how all of the big stuff interacts with each other, because effectively they're pricing how the government is going to be lending money. And when these yields are as low as what they are at the moment, which is below 1%, it's basically forecasting that global growth is going to be basically nothing for 10 years, or on that yield is going to be nothing, because they need to be able to price in some inflation, and they need to price in the cash rate plus 2 or 3%. So until when we start to see those Australian bond yields start to rise, or the US 10-year treasury start to rise, that's where some real optimism is starting to come into the market. So
yeah, right.
Those people who like to look at some big indicators, that's one of them. One of the big, what we are coming through this more unscathed than virtually anybody else in the world. There's Germany that's doing extraordinarily well. There's a few fringe countries that are doing extraordinarily well. Geographically located, we don't have to have walls like Trump wants to put up, right? Because we're an island. And just by the fact that we're an island, which is quite evolved as far as our infrastructure is concerned, we're largely protected. So it looks like we'll actually recover from this faster than anybody else, keeping in mind that we still don't know enough about COVID. We don't know whether you can get it twice. We don't know whether it's going to pop up in other people. We don't know enough.
We'd see that. But I mean, I remember, and we were chatting about it maybe last week or the week before, Andy, one of the reasons for that is Australia's basically, balance sheet and banking system is in within the top 5 of the world. Do you know what I mean? So kind of if we were going to have it, it was kind of a good time to have it, right? For Australia in essence. So
debt to GDP. So for those people who are not familiar with those terms, GDP is the gross domestic product. So if you think about it as a business, it is the revenue of the business. So all the shit that we sell and produce, that's our gross domestic product. Now, when we compare debt to GDP against America, they're 5 or 6 times where we are proportionally. Wow. When you have a look at the graph, there's America, there's Europe, and we're down here on a percentage basis of the amount of debt to GDP. So we haven't done this fiscal spending stuff that the rest of the world did in the GFC. Yes. So if we go back and we have a little bit of a history lesson, which is probably a good place to start, because I'll paint some optimism before I get pessimistic. The GFC,
you wouldn't be a financial planner without being pessimistic.
Mate, this is more economist stuff. But in the GFC, we saw a massive write-down, right? And the US and the rest of the world switched on the printing presses. So for those of you who are watching Netflix, it's like Money Heist, right? They jumped inside a big printing press and they just started printing euros and American dollars and just pumping money into the economy, lending it into the economy to stimulate growth. Now, in Australia, we didn't do that because we had this magic white knight come along, which was China. And China went on the biggest infrastructural spends that we've seen on record ever.
In the world.
And they saved Australia through minerals and resources, which was a great mining boom, right? That shielded us and stopped us from having such a hard landing and potentially going into recession or depression. We actually bounced and kicked extraordinarily quickly, and the government didn't have to do anything apart from take acknowledgement of how good they were for something that they had no control over. And that's effectively what happened in the GFC. So if we fast forward to now, Australia has been in such a good place because we haven't switched on the printing presses, right? Yeah. So we don't have that amount of debt on our balance sheet. So we've got the ability to stimulate. So if we start to look in the investment world, we start to look, well, consumer staples, so stuff like Coles and Woolies, they've already taken off, right? And in investing world, when things have already taken off, you've missed the boat, right? For most part, because markets look over the horizon, they price in future very, very quickly. So companies like Ansell, right, who make rubber gloves and condoms, both which are being used in record numbers right about now. As soon as this happens, they followed the market based on index selling, but then they kicked and bounced very, very quickly. So the investing world now, between now and whenever this plays out, is really a game about going, well, what is the right price for companies? So what is the right price for, the banks, given that they're going to have a lot of bad debt on their balance sheet, but they're also borrowing money at 0.25%. Now, as a business owner, if I can't borrow money off you, Jason, at 0.25% and create a minimum of 1% return on that capital as a business, well, I shouldn't be in business.
Absolutely not. It's crazy. Like right now, we're, as a business right now, I've made application for my trading businesses to the government for those loans at 0.25%, plus Queensland has got another one. We're hoping to qualify. I'm backing myself every day of the week, 100%. If I can qualify, for that $250,000 loan, I can make 20, 30% on that money every day of the week. Less than a quarter of a percent I've got to pay, and I make 20%. My upside is 19.75%. It's fucking mad. I'm like, for me, I'm like, shit, I hope I qualify. I want to get the loan.
and I think we should all be applying for it where we can. But here's where the pessimism comes in. Is that, yes, that's it. But otherwise, if the market could see what the correct pricing was, then the whole market would have bounced and we'd be, back to where we were. But that's not the case. And so this is where, so we're adopting sort of a three-pronged approach to investing at the moment. We're nibbling at the moment, and my clients will actually find this out through.
What are you doing?
We're nibbling.
We're having nibbling. I thought you said middling.
No, we're having a little bit of a bite. We're having a bit of a bite on things that we think are underpriced now for the future. But we're also very aware that there's global macro things that are at play, like America and New York, which are a basket case. South America.
Are you analysing them underpriced on income, Andy, or value? What's your gig? Where do you sit on it?
And that's the ultimate question.
Is that the $1 million question?
Because as a share price or the value of a company is basically a product of its future cash flows.
Yeah.
So what is its future ability to earn money? Yeah. And the reason why Lindsay Fox is interested, and geez, what a good call last week about the government and Virgin, just saying. The reason why Lindsay Fox is...
You picked it.
Mate, absolutely. It was a hard decision, right?
Yeah.
But the reason why Lindsay Fox is potentially looking at Virgin is because he can pick a very, very good quality operation, and he can potentially buy that at 25 cents in the dollar, right? And what will happen with the administrators that in charge of figuring out how to price this or whether to wind it up completely or sell it on, what's going to happen is they're going to start to look at trying to figure out what the future potential cash flow of that business looks like given uncertain times, right? So how long will it take to recover to those old cash flows? How much longer is this going to go for? And that's the big question, because if the market knew how long this was going to last, and if the market knew that Corona was going to be finished in Australia in the next month, prices would be rocketing already. But nobody quite knows. And that's the gene. If you can pick what that looks like to a reasonable degree, then you're going to be on the button. So here's the other thing when it comes to stocks, is it's finding the people who have the purse strings. You know, you and I call it the war chest. Yes. So who has the ability to continue to earn no revenue, keep its business afloat, and when the opportunity then rebounds, be the same business when it rebounds. Yeah. So you start to look at companies like the Macquarie banks of the world. You start to look at the banks of Australia, because they're mandatorily from the government having to have these massive reserves to underpin them. You start to look at some of these other companies, not your Virgin. Your Virgin, within weeks, it didn't have a war chest, boom. And the reason being is Virgin was on an expansion journey, and as you expand, you chew cash. Right, so it had no cash reserves. As soon as
it's like traveling across the desert, brother. If you're going to go across the desert, you got to carry enough water. If you fucking don't carry enough water, you die in the desert.
But that's the thing. If you're trying to race across the desert, where we're talking about beating the next person, then you take the bare minimum to get across. But the risk is to die in the desert, right?
That's a great analogy.
So that's what we're looking at in markets. So where we're really focused now is things like infrastructure assets that have been smashed. Like, have a think about it. All of these roads and stuff like that earn income from cars going around, all of a sudden have no cars going through them. And it's like, well, shit, eventually that's going to get back to some degree of normal, right? But in the meantime, those assets have been smashed. They have also been smashed at the same time as people are taking money out of their super funds because en masse. So the self-managed, the industry funds are selling off these infrastructure assets, discounts, because they need the liquidity for people to redeem funds out of their super, which is totally unexpected. So sometimes you can find these assets priced really lowly, and you've got to take the risk because nobody wants to buy it when it's down there because it looks terrible. But the reality is that those cash flows will come back. So at the moment, as I said, we're nibbling. And then if we see another big write down in markets, which I believe is possible, then we will be biting hard. Yeah. And then our third strain will be, as markets recover, to start to come back in. And the things that we'll be looking at are the things that have been crunched, that have great balance sheets, that have good potential future cash flows. But the part that we can't predict is this part in the middle, which is how long is it going to last here? But not just here, is how long is it going to last over in the States? Because Australia plays with different countries around the world. So that looks pretty bleak at the moment for a period of maybe 6 months, maybe longer if there's more outbreaks. But we've got to remember the white knight, because one of the things that one of my colleagues said to me today is going to remember what happened with China. I'm like, yeah. So if all of a sudden China come out of this and then they stimulate and they go on an infrastructure boom that dwarfs the last one to keep up with the US, then all of a sudden Australia could be in a position where we actually not just avoid a recession, which we should probably have, or a depression, which is still on the cards. If that ends up happening in China, we could actually go and do this double bounce through two of the biggest economic disasters in the last 40 years. We have the potential to ride through both of them. So that's the utopian view of where we'd like it to go.
I like that one, Andy. I like that one.
But in the meantime, there's plenty of companies that it's worthwhile starting to take pragmatic nibbles and a structural strategy, like you with the property investors, a strategy of when to bite hard. And then when you bite hard, you hold, and then you wait for a good sign of recovery and then potentially get back in. And those are the sorts of things that we're looking at the moment. And because the rest of it, you can't predict. And, you know, there's geopolitical issues, there's political issues, there's China and it's going to end up with big stoushes against the US. Like, there's a whole lot of this stuff at play. But I think that Australia is going to, if we look inward to Australia, I think there's some real incredible opportunities that'll be there for both listed equities and also mergers and acquisitions. And Virgin is the first mergers and acquisitions that came on board. And I think we said it in the first Wine and Wisdom, that I believe that this will be an era of unprecedented mergers and acquisitions. And that's the first one off the bat. The very first big company that went south immediately. And you don't hear this stuff. Usually things go into administration, it's a while. This thing was not in administration for a day, and there were multiple parties that are interested. So that gives you an idea.
Mate, I've had, in the last 2 weeks, I've had one deal a day come my way when it comes to the small scale mergers acquisition, when it comes to property management or finance trail books come our way. Some of the smaller operators, you know, didn't have their war chest locked away. They're looking for an exit and they're selling at maybe 30 cents in the dollar, 40 cents in the dollar. And, you know, if you've got the capital and you've got the capacity, then, you know, those things in 2 years' time, you know, those clients aren't going anywhere. If you understand how to manage it, that's great. Mergers and acquisitions, exciting times in that sort of space. You know, absolutely. That's for sure. Yeah.
100%. And it's very much watch this space. And I think there hasn't been as good a time to be looking at markets with an opportunist's mindset. Yeah. And it really is, you've got to put on the mindset of opportunity when everyone's got the mindset of fear. And when everyone's got the mindset of opportunity, you've got to put on the mindset of a little bit of fear. And so if you can reverse that psychology, then the perspective that you have will be, well, it'll be better than the next person, because you'll be looking at it through a different lens than the emotional lens that people are in. And there's heaps. And I'll start to bring some more to the table, more specific examples in the coming weeks. I'm really aware though that there's a question that I promised to have answered, and this is more so in your domain. And I won't name it, the person will know who it is, but basically they're small business and hit very, very hard by the coronavirus, and they've got a lease on a factory, right? And so without going into too much detail, they're trying to figure out what their entitlements are or what their position is as a small business owner in regards to the rent negotiations.
Yeah.
And, you know, you and I have had chats about it, because there's things that you can do. You can potentially, as a small business owner, you can wind up your business and basically say, you know what, I'm struggling to survive now. If I have a liability when I come out of this, then it's going to be almost impossible, if not extraordinarily difficult for me to trade. You could wind up your business, and you can potentially start fresh with a completely different business and thrive on. But what can we do in between that space? Because everything's negotiable.
Yeah.
So can you talk me through the reality of the lease space with the small to medium business owner?
Yeah, absolutely, mate. Well, you know, in the real estate space, there's been quite a lot of work at a state level and also national level on the legislation, and that happened fairly quickly within sort of, you know, 3 to 4 weeks. But, you know, speaking directly to the commercial legislation, there is a set of guidelines and principles in play right now. They exist for both tenant and also landlord to behave by. And basically, if you are affected by COVID and you qualify for the JobKeeper, so, you know, your turnover or revenue has dropped 30% or more, and I'm assuming that, you know, I'm pretty sure that if someone's sort of, you know, hiring a factory and they can't use it, their revenue's kind of, you know, gone down.
Yep.
So you're basically protected by legislation and law right now, and the landlord has to behave. So there's some really interesting things that are in play right now. And what I'll do, Andy, maybe with the post here, I can share a document that's available for people when it comes to the code of conduct. But let's just maybe talk through it as we go. And I did prepare a little thing a bit earlier. Has to behave. Hey, so there's some really interesting things. Oh, hang on. That are in.
I think we were just listening to ourselves.
Yeah. All right. I'll do this. Hang on. Let's try this. Hopefully. Oh, that's better.
Yep, we got
it. So there's, I don't know if everyone can see it, but in here, this is the code of conduct for the world of commercial real estate at the moment. And a few little interesting things we got to understand. So if your job's affected and you qualify for the JobKeeper, this applies to you. If you don't qualify for the JobKeeper, it means that you can continue to pay your rent and, you should be okay and don't make it a problem. Basically, it's this kind of idea, Aussie idea, which is kind of fair play, right?
Right. So that's interesting. They're now using your eligibility for a JobKeeper as the kind of qualification tests for other.
Yeah. And I think it's quite clever. I mean, I didn't expect the government to be this clever. I've never given them this much credit, but
it's either clever or lazy. But we'll go with clever because
they're basically saying, listen, ATO, check everyone out. If they qualify, then you can use these things, right?
Which you can see how it came about, can't you? They're sitting there going, "Oh my God, another thing to bloody administer." Hang on. Let's just piggyback off that.
I can do it.
Done. Pass.
Perfect. Yeah. So number one, you got to qualify for the JobKeeper. If that's the case, then these measures are your protection system. Okay. So basically, it's a code of conduct. So it's intended for landlords and tenants to get together and work it out, basically, work out an arrangement. But there's some guidelines. Any agreement takes into your revenue and expenses and profitability. Now, if it's gone 50% down or 70% down or 90% down, like that's the telltale sign. If you've dropped 90%, technically under this code of conduct, you can say, mate, I can only pay 10% of the rent. And the landlord has to go, yeah, okay, mate, no problem. Because at the other end of this, so for the landlord, they can apply to the bank and say, my tenant's fucked, give me a holiday. And the banks are 100% with the click of a button, fucking giving the landlord a holiday. So don't miss that, right? Now, there is this kind of behave yourself or else demand from the banks on the landlords, where if the landlord doesn't behave and you report them to the bank will not give them a holiday. Okay, so you've got some leverage.
Oh, wow.
Now, you can't do this if you don't qualify for JobKeeper. If you're still flying along and you've dropped 5%, pay your fucking rent. You've got no choice, right? Yeah. Only if you qualify. So basically, if you qualify, it's an open agreement, and if your landlord's being a dick, report them to their financier. Ask them who their funder is, okay? Because they can get 0% interest from their financier or zero payment. It gets capitalized later, so that's something for them to deal with.
Mm-hmm.
But they don't get. So there's a set of principles in here, which I'm not going to talk through each single one, but right now the minimum off the bat is a 50% total reduction in the rent payable. 50%. So literally tomorrow, say I qualify for the JobKeeper and under the principles, mate, I'm only paying 50% of the rent. End of story.
Yep.
You don't even have to get permission. You don't have to do anything. You just say, mate, that's the way it is. Take it or leave it.
As long as you've Qualified for JobKeeper. So
you got to qualify for JobKeeper.
So I guess in summary, you will provide the guide, but in summary, if you're a small to medium business owner, or if you're a landlord, right, you are almost obliged to give a rent relief based on the proportionate downturn of the business underneath you.
100%. That is the gist of this. If you drop 90%, you as the landlord you must pass on a 90% rent reduction. You must. And if you do, the tenant has to behave and continue with the lease. And then the recovery period, which is between 12 and 24 months, as your revenue goes back up, the landlord can only expect you to pay as an increase in your revenue. Okay, so
on future payments,
mate, over 24 months. So that's where it gets a little smidgy grey, but there is some guidelines in here. Couple of things to understand: the landlord cannot draw on your rent guarantee. All right, they can't draw on your cash bond. They can't draw on your personal guarantee.
But that's with the exclusions that, with the disclaimer that you still have to be a good tenant. You can't start throwing bricks through walls if you misbehave, bets are off.
Yeah, and if you don't show up and negotiate and have evidence for your negotiation process, then the bets are off, gang. Well, not necessarily, Andy. Let's talk about that. Okay, so let's talk about you as a tenant. You really like the location, and when life gets back to normal, you want to get back in that factory and you want to continue to trade because it's spot on and it's exactly what you want, right? But in the meantime, the landlord has to stump up and help you out, and you've got negotiating power. You show them your turnover and they have to work with you. End of story. Literally, that's the gig, right?
So I think that this is almost one of those areas where I'll go, regardless of whether you're a tenant, a business owner, whether you're a leaseor, so you're leasing factories, a friend of somebody who's leasing, or a friend of a business owner who's leasing, get this document. We'll put it onto all of our websites, but get this document, give it to your friends, your relative people, and make them read it chapter and verse, because this is actually the we're in it together kind of approach, because this is the end result. If you're a landlord and you're a dick and you try and force a tenant into a bad situation, you may end up putting them into administration or liquidation. Yes. And then as a landlord, you're going to get nothing, because unless you have got real estate that everyone wants to jump into, right, and it may take you time to get people to commit to longer term leases, you might end up vacant. So instead of getting something, you're going to get nothing for a period of time.
But also, Andy, the banks are not going to give you any interest holiday. If you don't help the tenant, you have to show evidence that you're helping the tenant, right, to get the rent holiday as a commercial landlord. If you don't, then the banks, under their code of conduct agreement with the government, are happy to go, like they're allowed to go, Andy, you're being a prick. No, mate, we're going to smash you. You have to show that you help the tenant.
Yes.
To then, in commercial, funnily enough, in residential, it's not the case at all. But we won't talk about that one today.
That's a whole nother bottle of wine.
That's a whole nother bottle of wine. But commercial, for everyone listening in, if you want to stay in the tenancy that you're at, and your landlord is a reasonable person, use this document, get to the table and negotiate. Now, you can stop paying the rent right now and they can't do anything for 6 months. So they are better off negotiating with you and receiving something, showing that they negotiated and received something, and then showing that to the bank and getting a holiday, because then the landlord's better off. So the bank is the hot potato finish point. The bank will go, right, Andy, you owned the factory. Jason was the person renting it. You gave me a break. All right, we'll give you a break, Andy. Andy, no interest for you for 6 months, mate. Good work. Good on you, Aussie. Well done, Aussie battler, helping out the bloke. here, have a holiday, right? They'll capitalise it later and you'll have to pay it back, but, you know, they're not going to call your loan in. In commercial world, like, you know, the banks are fucking aggressive. You know, like they'll roll you in 5 seconds flat if your LVR's upside down. But, you know, right now they have
allegedly.
Yeah. But, you know, so really at the end of the day, it's a fair play code of conduct right now. And like, you know, if anyone listening in needs some help there, you and I are more than happy to sort of talk them through it. But
absolutely. Look, it's just so critical, because at the end of the day, if the landlords push it too hard, they'll push people out of business and everybody loses. If the person whose business it is, who's leasing the factories or the premises, try and be stupid about it, well, you know, I guess you got the opportunity to be a dick, but I guess it's a don't be a dick sort of policy, because
it's a don't be a dick policy, right? Like, you know, if it's genuine, just chat to everyone. And if someone's being a dick, well, tell them to fuck off, because, you know, the government and the banks have zero tolerance for it. Yeah. Like, end of story. Do you know what I mean?
And no time to really probably judge whether the treatment is fair and equitable. I reckon it'll just be bang and then move on. Next.
Well, the thing is, here's the thing. There's no court. Like, you can't take anyone to court. And this is the other thing. So here's the next part of this. You genuinely want to see this through and make it work. There's some protections. Awesome. Okay. 100% Reggie Didge. On the flip side, like you can't see it. You can't see your way through. There's some challenges or some problems. You should start thinking about the idea. We've got this 6 months moratorium right now as a business owner, like you said, to rearrange your, under the safe harbour laws, the corporation safe harbour laws in Australia, genuinely rearrange your situation. So in 12 months time, you don't end up with all of these liabilities that end up ruining you anyway, right?
So let's chat to that a little bit, Jace, because that's probably terminology that some of the small businesses who are listening, and I'm sorry for those of you who aren't small businesses, but you should be really listening to this from a big business perspective too, because the same thing is true in equities as it is here. But so small business owners have costs, have leases, have all of these things. And in normal trading environments, we have the safe harbour steps that we need to follow, which involves making sure that as directors of companies that we don't trade insolvent. And insolvent just basically means that we don't continue to take money when we know that we're basically bankrupt and we can't pay it.
Yeah.
No more relevant than right now, where some businesses' cash flows have gone from 100% to 10%.
Yeah.
So let's talk a little bit to the safe harbour steps here, because as business owners, you know, we do have get outs if you know, if the seas get too rough. We do have lifeboats that can sort of take us out through the safe harbour steps, and it's worthwhile knowing these, because people sort of think, well, if you're down and out, you're down and out, and you sink. You're on a ship, you sink with the ship. But that's not actually the case. We do have lifeboats, and we can jump into them, and sometimes then be bigger and better as a result of it.
100%, mate. Yeah, you know, like I've said this to you a couple of times. You know, business is a full contact sport. There's no mercy on the field of, you know, on the field of business. You know, it's you perform or you're dead. End of story. Like you're in the graveyard or you're out there, you know, swinging and having a crack at it. But like you said, there are some protection mechanisms for circumstances beyond your capacity as a director to manage, forecast, and foresee, e.g. COVID. So right now, 100%, if you are a business owner specifically for this sort of set of commentaries, if you're a business owner and there is just no way through out the other side of this, and or you're thinking, well, shit, it's a 50-50 at best. It is absolutely, genuinely valid to start the safe harbor concepts where, you can arrange your affairs so the knock-on effect of a potential failure in business doesn't just rip through your whole world, or your personal world, like a fucking tornado, and reality is the government wants business owners to survive and employ people. Australian medium, small to medium business owners employ, 50, 60, 70% of the Australian population.
I think it's 56%. And we pay 49%
of the taxes
of the government's revenue.
Yeah. So, mate, the government has some safe measures in there. It's called safe harboring. If anyone wants more detail on that, let you and me know. But, if for some of you guys who are business owners or sort of feeling like, shit, I can't see the way through, or maybe it's a 50-50.
Or I can see the way through, but not with all of this debt that I'm now accumulating.
Yeah. Or not without sort of minimizing the risk, Andy. Minimizing the risk. It's smart to minimize the risk. It's smart to minimize the risk, as you go through. So certainly that is a function, big picture function of rearranging your structures in a way that it doesn't knock on effect, continuously and wipe you out for 20 years as an individual. Like that's not what it's about.
So let's wrap a high level context around this, because the details of this can be quite complex. But like if we break it down for business owners to give them the practical playbook on this is, and correct me if I'm wrong, Jace, is I'm a business owner. We've had to pivot. Our old model is maybe broken, or maybe needs a substantial restructure.
Yeah.
We have landlords, or maybe we don't have landlords, but our debtors are not playing nice. And in our current model, we can't see a way through it. But with a slight tweak of the model, we actually see calm seas and beautiful winds. If we're in that position whereby we can't get to the calm seas and the beautiful winds because we've got to go through a storm that we won't weather, there is another avenue that you can go around, which is the safe harbour. And I guess to summarize it, we can't talk to you in a forum like this about the technicalities of what that means, because we'd put ourselves at risk, and we'd put you at risk of maybe not giving you the personal advice that you need. But I guess the awareness that if you've got that dynamic where you can see through the other side, but you can't with the load that you're carrying and the storm that's in front of you, investigate the safe harbour, chat to your accountant, reach out to us. We'll put you in touch with people that we know who can help you get through that. And we're not talking about for opportunists' sake. We're talking about rigidage, proper people who are genuinely in a position where they're struggling, or they've got bad people who are around them, maybe not bad people, but aggressive people who are around them that are not making their lives easier. There is another option. I guess that's the theme or the key.
100%, mate. If I sort of use my example for my personal example, 13, 14 years ago, at the end of the day, if you've got some challenges or debts that you may have incurred because you are taking a risk, business owners take a risk. Like, we take the field, we're playing on the game of commercial outcome, and sometimes through no fault of your own, you don't get it right.
Yeah.
So, it is more than fair and reasonable that there are some protection mechanisms in there for that not to completely ruin someone for, 50 years of their life. So that's what those safe harbor rules are all about. So, for anyone who's listening in, if you're feeling a little bit stress or pressure in that space, give us a shout out. We can point you in the right direction.
But I'm getting a few comments here, which just looking in. There's Julie saying, if someone's being a dick, tell them to fuck off. I love it, Jason. Candidness. There's Trina who's saying, any specific market tips? Yes.
Call me, Trina, call me.
I still think Australia's economy recovery will be slow given the debts, and the business needs to revisit continuity plans and risk planning scenarios like that. It's a great comment.
Yeah.
The one thing about equity markets though is that they're not always pragmatic. Is that when as soon as they think they can see where the future is, they will respond very, very quickly.
They'll reprice quickly, won't they? Yeah.
And then they'll figure out whether they're right later.
Yeah.
But I think it's good so far. How are we going for time? We're kind of almost there for today. I'm just going to go through a list of questions that we didn't get to previously. For those people who are on the one with Paul Sidorovsky, who asked a lot about the JobKeeper questions, we're just going to grab him outside of this. It was just using bandwidth with Australian internet. It was just not working for us. So we're going to get him to answer those questions, and we'll pump them out into our allotted pages. So we haven't forgotten about you, and we do appreciate your questions. For Lindsay, you asked it whether there's templates or whether there's stimulus package templates out there. 100%, mate, there are. Reach out to us or jump on the Corona app, mate. It's actually a very good app. A lot of people aren't
pretty
using
good, isn't it? Yeah, yeah.
And then if there are things that you want more detail in, ring out, shoot the specific question to us. It's hard for us to produce mass content, but if you're more specific and you go, I want detail on that, between me, Jason, our contacts will figure stuff out for you. I'm a visual person, so I need to see something visual.
Hang on, Andy. Hang on. I'll just quickly do something. There we go. How about that?
John. Okay, so Jono's actually. Let's talk to Jono, because Jono's been a good supporter here. Questions, and I haven't answered any of them. His first one was, and this is real wine talk, Jace. So we'll deal with Jono's questions to finish this off, I reckon. And there's a few of them, so I'll reel off all the questions, then we can chat to them.
Yeah.
With the current government stimulus around the globe, how will every country pay for this? Will they need to devalue every currency, bringing back the gold standard? So very simple question to answer there, Jono. Very, very simple. In the current environment, what impact will this have on mergers and acquisitions? Should we be looking to buy distressed businesses now or hold tight for another 12 months? I think it's an incredible question. What is the biggest opportunity you see right now that we could take advantage of? And I'm sure there's one more. What do you see as the wisest investment a business owner could make right now? As in, if a business has reserved funds, should they be deploying some of this into the market, process, developing product, acquisition, or holding it in their war chest? So I think two of those questions kind of come to the same thing. I think we'll just address the gold standard and go, yes.
Not Bitcoin, Andy. Not Bitcoin.
No, look, the one thing that I will say to gold is a scarce product, right? So there's only so much of it around the world, and so in theory it holds a value. The challenge with gold is that there has been a derivative exchange that has come out, and derivative exchange is a way that with scarce resources, mass manipulation can happen on the real tangible product for that. Now, we've seen that in oil more recently. So you'll hear these headlines that oil was negative $14 a barrel. Now, that's not a reality, right, people? That is a futures contract that is ending, and a futures contract is a derivative product. They are not selling oil for negative $14 a barrel, right? So people are not going, here, Mr. Supplier, and giving them $40 for a barrel of oil, and taking $40 from them and taking the barrel of oil. That's not what's actually happening. What happens is there is a derivative exchange, which is kind of complicated, but effectively it is a market whereby you buy or sell something you don't own. And so you say it was designed for hedging, and many of you will see Trading Places with Dan Aykroyd and who was it?
Eddie Murphy and was Eddie Murphy?
Was it Dan Aykroyd?
Yeah, Dan Aykroyd and Eddie Murphy.
And so effectively they talked about the futures exchange on oranges. But basically the futures...
It's pork bellies, bro. It's pork belly.
No, was it pork belly? I thought it was oranges.
It was pork bellies.
Pork bellies. I was pretty young when that came out, Jace, so my memory isn't too good.
Are you saying that I'm old, Andy?
Mate, let's just stick to the script. So effectively what happens in primary production businesses, like when you're growing stuff and like whether it's grains for bread or whether it's pork bellies or whether it's fruit, seasons are up or down, but your fixed costs are the same, right? You've still got machinery, plant and people. So what people used to do is they used to lock in today what they would sell their produce for tomorrow so that they could manage their business risk over time, right? So what that meant is me, and I grow oranges and I'm selling to Jason. I say, Jason, per ton, I'd like to lock in $50 per ton today or $500 per ton today for what I'm going to produce to you. So you can lock that into your metrics and you can plan your business and I can plan mine. Are you happy to do that? And Jason would say yes or no. And then we could lock in that price. And so there's the duration risk, right? And then maybe I wasn't able to provide Jason with all of the oranges that he needed, or maybe I had a lot, right? But we'd fix the price. Anyway, Greenspan, in his ultimate wisdom about 15 years ago, who was the chair of the Federal Reserve in the US, said, why don't we create these same instruments, these derivative instruments over financial products as well, and over gold and over CDOs and over property indexes. So it blew up the world once before. But effectively what it does is it says, okay, I hold a gold of bar, a bar of gold.
Could be time to call this quits, Andy.
Jason, I'll sell it to you in the future, but you tell me what you think it's going to be worth in the future, and I'll sell it to you today. I won't give it to you right now, but you tell me what it's worth in the future, and then at that point in time in the future, I'll give it to you at that price. Now, if gold goes down, then I buy some more gold, I give it to Jason, and I take the profit that's in between. If gold goes up, then I've lost money. Now, there is a huge amount of market manipulation or trading that happens in the gold exchange that now means that because it's a scarce resource and because there can be large volumes that traded, it goes up and down a lot, right? And it can be manipulated by governments or it can be manipulated by traders, and that's happened with the big gold crunch, which was, I think, in the 80s. Yeah. So going gold back, I don't know, but it is a heavily futures traded commodity. And it at times, yes, the old one was you go to gold for safety. You just have to be very, very aware. But probably, given that I've probably had too much of the Chardonnay, which is a Point Leo estate, which is from down my neck of the woods. They're a beautiful winery, beautiful views and beautiful statues. It's a 2016. It's an absolute cracker drop. It really is. It's quite an incredible place. Very, very nice. And by the judge of it, fairly decent alcohol content too. So jumping to Jono's other stuff about business is, I guess it's how do you make decisions on how to deploy money if you've got reserves as a business owner in this environment?
Well, mate, listen, I'd probably speak to that with Jono. Just, I can't remember the book I read about it, but, duty free, the business of duty free. It might have been Kiyosaki or something anyway, but the DFO business had a behavior of buying, expanding, like saving their cash, waiting till travel and airline issues, reduced other competitors in their businesses, buying them for 20 cents in the dollar, reinvesting in those businesses, and then selling them on the rebound, and then knowing in about 5 to 8 years they would buy them back again. Duty free DFO had done it around the world. It was like 8 times in the last 28 years or something. They made their money not from the everyday cash flow, but buying and selling and trading the businesses. I'll get the book. It's a fucking fascinating read. I would say this to Jono now, there are some businesses that really well. I wouldn't spend my money in a business I didn't know well. Like right now for me, I've been offered 2 businesses right now, which are rent rolls and mortgage books right now in the last few weeks. I can buy them for 30% of their value because someone needs cash right now. Their ongoing revenue stream is amazing. I know I can see those businesses through by integrating them into my business, at a click of a finger, no problem at all. And I can trade those. I could sell them on in 12, 18 months, 2 years time, 3 years time for 3 to 8 to 10 times what I purchased them for. So that's what I would say. Just using what I'm looking at right now is I would trade in a place that I know really well. That's do you know what I mean?
Yep. And look, I think you nailed it on the nail on the head with opportunities can sometimes be a wolf in sheep's clothing.
Yeah.
Right. It's, as a business owner, we might go, these people have something that we've wanted in our business. And so there's the opportunity when they're struggling financially because they're desperate and they want to come on board. There's the opportunity that you kind of go, well, that will just fit perfectly and it's a great opportunity. But you really have to know the forward-looking cash flow of that. So if we jump into the world of mergers and acquisitions, and we go back to the Lindsay Fox and Virgin, and geez, I hope it's Lindsay Fox because I haven't done a lot of research into this. But
I've already sent Lindsay a text. I'm like, mate, I'm in. Can you save my million freaking
But it's about understanding the future cash flow dynamics of where you're going to put your money. It's always about understanding the future cash flow dynamics of where you're going to put your money. So whether it's now or whether it's later is going to be a question of your interpretation. If it's now, it's because you can pick up great cash flow that will maybe sustain you over that medium term and also pick up the competitive advantage of being able to absorb the scale of that operations into your business or into your portfolio.
Yeah.
But if it's a matter of purely the opportunity of acquiring the talents in an organized structure, then you have to ask yourself, what is the probability of the future cash flow of that coming and repaying the money that I'm going to inject into it? Because for every time you choose to deploy money, you're choosing not to deploy it somewhere else or not to hold it as a reserve. Very, very difficult to tell you, Jono, whether you should deploy it right now or not, or hold it right now. You need to make that as a strategic business decision. But jumping too early right now, I think that all of us are getting ready for more of this for a period of time. And we're probably getting longer with our views the more comfortable we are in, well, I say comfortable, but it's uncomfortable, but we're getting more comfortable with the discomfort. And we're probably going, okay, well, let's figure out a way of going a little bit longer and hope that it's better. So look at the forward cash flow probability or the forward cash flow acquisition of what you're looking at buying, and then understand what other options are there for you. Do I sit on it? Will that potential acquisition become more challenged and more exposed? Are you buying it because you don't want a competitor to buy it? So that's a strategic acquisition, in which case you want to absorb that into your business as a strategic acquisition so that somebody else can't have it. Now, you'll only know whether other people are in play as to, your own nous in your own business segment. But be wary of the future cash flow opportunities or realise the future cash flow opportunities of that acquisition. And hopefully that kind of answers the question.
Mate, and the other thing, Andy, which resonates really well with me, a fellow called Brad Sugars, many years ago. There's mixed reviews on his style and opinion and whatever, but there was one comment that he made is a lot of people will spend a lot of money to buy a business, but if you spent the same amount of money that you were considering to buy that business on marketing, what would be the outcome? And like I play that over and over and over and over and over in my head all the time. It's like go and buy someone else's business or spend $1 million on marketing in one year, 1 month, 6 months. What would that look like for you and your business? The transformation sometimes can be unbelievable, and you just basically put the boost into new leads into your business rather than buying someone else's infrastructure, HR,
liabilities,
you name it. So
culture, which may be a culture, but it may not be your culture.
Yeah.
And I think that, as you said right at the beginning, and maybe this is a great way of top and tailing today's wine and wisdom, and I've completely forgotten what I was going to say. No. I'm sure I can find it with a few seconds.
Find it. All good, mate, all good.
No, it's completely gone.
It has been a good conversation today, and the internet has been kind to us. It has been kind to us today. So hopefully we've provided some value to those who are listening in, and our commitment is to follow through on posting that document for anyone who wants to know about the commercial leasing behaviour systems. Myself and Andy, if anyone wants some more personalised conversation around property and property investing and some of that stuff, or the share market, business, and all things equities and finances over in Andy's court, we're more than happy to chat to you guys on a one-on-one instance. So, mate, fantastic to chat today, mate. I think some of it came together quite nicely for us all. So, we're getting the hang of the tunes, and hopefully we've added some value, mate.
But yeah, absolutely. I'll mirror it. And the other thing is that when you get the questions in early, Jason and I are aware of them. We might be just having a bit of fun through some of it, but we're trying to pepper in, responses as well. And this is genuinely our debrief and what we would normally just do together. So we welcome you into it, and hopefully, you gain a little bit from it as well. So we love having you, and we enjoy our chats on a Friday as well. So to equal parts of wine and wisdom.
All good. Thank you, Andy. Thank you, everyone. Cheers, guys. See you next week.